How to read a congregational budget and balance sheet. So there is no standard. You've heard this is the refrain through all of these workshops. There's no standard way for congregations to have their budgets and their balance sheets designed. I have spent the last 4 years reading congregational budgets as part of doing governance assessments and as part of doing staffing assessments. And every single one of them is differently designed. And in my experience, every congregation thinks that theirs is standard to everybody else. But what the different line items are different, how the structure, how it's formed. Every congregation's budget is designed differently. And each congregation has different programs, operational needs, and systemic designs. The budget design for a congregation that has an integral day school is going to be very different than the budget design for a congregation that doesn't have one. Because that day school is a huge program that rests within that congregational system, and it changes the rest of the budget design. How the congregation's program operations are funded, in other words, what each line item is also different in each congregation, is often based on an arbitrary decision that was made long ago by leaders that may not even be in the system anymore. You know, that if you've ever want to watch a treasurer or a bookkeeper have serious problems, go to them and tell them you want to change what the line items mean.
Chart of accounts.
Right.
Which I'm going to point out the UUA did to the regions 3 years ago.
Right. And we're still living into that, right? Yes. So, you know, we had the part of trying to bring 4 regions that all had differently designed budgets, 4 districts that all had differently designed budgets into a common thread. And that took 3 years of crosswalk budgets. So just saying that shifting a congregation's budget design is a major task for congregational lay leadership. It also has implications for how accounts are tracked over time. And so most congregations make the decision to just continue with the budget design that they have pretty much in perpetuity, whether it's serving them or not, and redefining for themselves what line items mean, but adapting their functioning to the budget rather than adapting the budget to their functioning. There are exceptions to this rule. I have seen some brave congregations, especially around making major conceptual changes in budget design. Really, it's often been the switch between what is called a mission budget, from a structural budget to a mission budget, and we'll talk about that in a second. But the core thing here is to realize that there is no way I can put up on the screen a thing that says this is the standard budget design for UU congregations. It really is something you have to learn and explore about your own congregational system. Now, I named what a mission budget is. There are 2 major kinds of budgets that actively exist in UU congregations. The most common one is called a structural budget. And a structural budget really defines the congregation based upon its structure. So an example of it would be you have an RE committee, and the RE committee has a budget. You have a congregational staff, and the congregational staff has a budget section. You know, budget line items for each staff position, a subcategory for the professional expenses for each staff position. So it's based upon your congregation structure. And really, when this is done well, what you see is a budget that reflects the congregation structure. The challenge is when your congregation structure adapts, the budget then has to adapt, at least adding new line items. And, you know, one of the ways I see this is often reflected is when a congregation no longer has a staffing position, but that staffing position lives as ghost line item numbers in that budget in perpetuity. Because it is based in the congregation structure and it's really hard to de-adapt. So when you see $0 line items next to a congregational staffing position, it's because that position existed at one time and no longer does now. Sometimes you can go in and have people go in and actually delete that section out, but still reserve those numbers. So you never, in order for most accounting systems, you can never reuse those numbers and still get comparable data. But the difference between a mission budget, a structural budget is based upon the congregation structure. A mission budget really defines budgeting in a completely different way, but through different ministry or program areas. So in other words, you would have, and I'm not going to do a whole class in mission budgeting because that takes about 6 hours, and I'm not certain I'm qualified for it. But the core premise is that instead of having it defined, the budget defined by the congregation structure, it's defined by ministry or program areas. So, for example, worship is a ministry or program area, and elements, everything that has something to do with worship, including part of the minister's salary, the percentage of the minister's salary and time that is spent on worship, is reflected in that section of the budget. Faith, lifespan faith development is another ministry mission area, and everything, including the religious educator's salary, and let's say maybe some additional amount of the minister's salary is for a religious education roles, are reflected in that section of the budget. So it's not based upon the congregation structure, but based upon the congregation's mission priorities. Now, I will tell you that in every congregation that I have seen that has a mission budget, they also have a structural budget somewhere in the background. That somewhere, maybe it's even on just the treasurer's computer or the bookkeeper, there is also a structural budget design somewhere in that system. And I bring this up because this can be confusing for congregations that have a mission budget. I have never seen a congregation successfully transition fully from a structural budget to a mission budget. They usually end up with both, and the structural budget becomes a background supporting document, and the mission budget becomes the public document in most cases. I'm not going to spend a lot more time on this. If you're interested in mission budgets, I highly recommend you have a conversation with two people, with your primary contact, but also with Pat Infante, Patricia Infante, who is our stewardship and finance program manager for the region. But really start with your primary contact. So also have the different congregations have different standards about the disclosure they do in congregational budgets. And the big place that this is usually seen is around staff salaries. There's a move in some of our congregations to only put a single number, a full total number for the staff salary, and to have the breakdown of what each staff member's salary and breakdown is in a separate document that is not disclosed. This is usually in our medium-sized to larger congregations. I'm not going to say that I endorse this approach. I personally think that it's important for the congregation to know what the compensation pattern is within the congregational staff. And I do know that some of our congregations have made the decision that it is an interest of the privacy of different members of the staff to not have that information be broadly disclosed. So in those situations, there is a sub-account, a sub-budget that details the different salaries and taxes and everything, for each employment taxes and everything for each of the different staff members. Are there any legal reasons for withholding staff salary details? The answer to that really is no, as far as I know in the states in which I work. This changes, and I'm not going to say that there isn't a state where there is not a legal reason for that. I've never, in the places where I've seen it done, it's never been for a legal reason that it's been done. It's almost always been done in an argument of the privacy of each staff member. Beth, do you have anything to share about that?
The only thing I would say is that the main time I've seen it done that way, it's been when there's been a major fight over salaries, potentially, where people have argued, where they've tried to nitpick, when they've tried to balance the budget and take a few, which instead of doing 10% across the board, they want to take more from one person than another. But it's also been argued that you don't know what the salary of every person sitting in the pew is. Why should you know what the salary of all your staff members are?
Right.
So those are some things that, and it does capture the historicals going back. I mean, those records are in the bookkeeping system. This is just what's presented to the congregation in terms of that.
Yeah. And in some cases where the board would actually have access to the full budget. It's what is published to the congregation. There's also a pattern, and I didn't put this in here, but there's also a pattern of some congregations present a simplified budget to the whole congregation for approval and not the full budget. That the full budget is seen by the governing board, but a simplified version is what is shared with the congregation that basically just gives you the top line items. So this amount is going to religious education, this amount is going to building and grounds, this amount is, and without the breakdowns within the subcategories, the sublines of each budget line item. Okay, so next sheet is that also most congregations have some kind of off-budget funds, different fund sites that need to be accounted for outside of the yearly budget cycle. Now, in the most cases, these off-budget funds are things like endowment funds. Endowment fund is probably the most common version of off-budget fund. That is a fund that is kept within the congregation's purview. Sometimes it's not. Sometimes congregations have their off-budget fund in a separate nonprofit, a separate 501c3, but in most cases it's kept within the congregation's purview and under the governing board's fiduciary authority. There's also special or restricted funds. In other words, one of the most common version of this is if a special fundraiser was done to do something special and it either hasn't made enough money to do that thing that was special, or it made so much money there was leftover money and they didn't know what to do with it, the congregation can maintain a off-budget fund. That also, the other most common one is what's called ministerial discretionary funds. This is a fund that is usually kept with it by congregations, that the minister is able to do things like make grants out of it to give supportive gifts to people who are in need. That is a separate fund. It's not part of the congregational budget. Often they do special fundraising for this fund, and the minister has discretion over how this fund is used within a set of guidelines of being able to support people within and beyond the congregation. I will tell you that when I was serving the congregation in Ventura, California, we had a fund such as this specifically to help people who were experiencing homelessness. And we as the ministers had discretion over the gifts we made from that fund to support people who were experiencing homelessness through crisis and times of challenge and problems. So this is another type of off-budget fund that the board still has fiduciary oversight for. And this is one of the weird ones, is that because it has a pastoral nature to it, the board can't necessarily know what the gifts were for or who got them, because that then would violate pastoral confidentiality. So it usually takes some covenantal and systemic understandings between the board and the professional staff to be able to know what are the guidelines among which this fund is being used, and what does the board need to know to be able to feel it's exercising appropriate fiduciary authority. The last is the legacy gift funds, and this is where there is often a major gift given to the congregation for which there is either a specific reason for the gift or encumberment upon the gift, or if there is a legacy gift there isn't an encumberment, but the congregation makes a decision that it's going to use this for a specific purpose that is outside of the congregation's budget. Now, all these funds have to be tracked in some way. Just because it's not in the budget does not mean it is not under the board's fiduciary authority. So a congregational board needs to be able to have not just awareness of the budget, but also awareness of the status of these kinds of special and restricted funds, and have some kind of reporting where they receive information about the activity and the status of these funds. And I do believe that every time a fund like this is created, there should be a policy that creates this fund and defines its use. One of the challenges we run into with these kind of funds and congregations is that the fund was created 25 years ago. No one remembers why it was created or what its purpose was or where it came from or what its restrictions are. Nobody can spend anything out of it because they don't know why it exists. And there's no guidance. So you have these pots of money that exist in congregations that are really almost inaccessible. They're not, because the board could make the decision to put a policy in place retroactively, but there is a fear that somebody will be upset about the use of that fund because they know, but they're not sharing. So my point is that if you're going to create a restricted fund, there needs to be a formal policy in place about the use of that fund, what its purpose is, and probably also captures a little bit of its history in order to be able to do good fiduciary authority and monitoring. The other thing I'll say is that for the most part, there are some exceptions to this rule, but for the most part, these kinds of special funds are often journal entries. And what I mean by that is that the actual monies are commingled. They're part of the congregation's main accounts, that they're not separate. They're not sitting in a separate bank somewhere. They're in the congregation's main accounts, but within your journal entries, you've recognized that this amount of money is part of a special fund and therefore not able to be spent in your operating funds. I will tell you that that commingling of funds, which saves money in not having multiple accounts, it is also one of the places where we most often begin to see congregations lose track of monies. That monies that, because it is commingled, journal entry funds often begin to be, sometimes, not often, but sometimes end up being used as if they were regular operational funds, and you lose track of them. That being said, I do get that the proliferation of accounts that could come from having multiple funds can also be problematic. So the right answer here is probably really good tracking of journal entry funds when they're not in a separate account. Go ahead, Beth.
One thing I'll suggest with that is that this is something the Ohio Meadville District did. We had an endowment. We had an investment account with the UUA, with the UUCEF. That's where all of our restricted funds were put. We had a checking and savings account with our bank. That's where all of our operating funds were put. So while we had several restricted funds, they were all commingled with each other, but at least they were all off in one separate place where we could keep track of them. And therefore, it was pretty easy to keep track of when the money was going in and out, where it was going to.
Yep. And that was the recommendation I was going to make, was that combine your restricted funds into one account and put it somewhere else so that it's not commingled with your operating funds. And Beth named the UUCEF, which is the Common Endowment Fund. That's a great place to put it. Not just because we're the UUA and we're saying that, but it's just because it does have a decent rate of return on investment, and it also has a commitment to just investing. And it is fairly accessible. It's not as accessible as, say, a checking account would be, but it is the monies remain fairly accessible to you. But point being is that the most times we've seen problematic pieces is when these restricted funds are commingled as journal entries with the same funds as the operating funds. So I'm going to move from that. So the next section is to talk about, we've been talking about budgeting and we've been talking about special funds.
David, I'm going to interrupt you for a second because we have two questions in the chat.
Yes. Okay, sorry. Thank you.
One person asked, what about restrictions imposed by donors? You could capture that. That came up when you were talking about making a policy. You have to honor restrictions set by donors. You can refuse to accept the money if you feel the restrictions are inappropriate or something you could not live up to. And you can, if you're writing a policy, you should include that. You should include those restrictions in.
So I will say that in my last church, we had a policy that we did not accept restricted donations. And that meant we turned down money from time to time. And that was controversial. Whether it's a good or bad idea, I think there's a cost-benefit analysis to you. If you can live with the restriction and you document it well and put it in an actual policy, I think that's appropriate. If you can, and the other one is, could a board vote reflected in the minutes be sufficient for determining the use of restricted fund? My answer, I think, is no, because the board, frankly, boards don't do great about tracking their minutes, and it's not really all that accessible. It may be accessible 2 or 3 years down the road, but not 15. So a policy in your policy book, and You haven't heard me in the last other session say have a policy book, but something that is more easily accessible than board minutes from 2 or 3 or 4 or 15 years ago. And also the motion tends to be fairly short. I think that the policy should be fairly robust. Should have in it all the restrictions, should have in it all of, a narrative about what was the circumstances upon which this was created. So we can give some more thought to this, and this is something to talk to your primary contact about, or to reach out to me or Beth to be able to coach you on if and when this is a situation you're actually working with. So thank you for capturing that, Beth. So balance sheets and profit and loss statements. Balance sheets and profit and loss statements in congregations basically are a tool by which you do actual comparison between the budget itself, what you planned, and what's actually occurring. Most of them sometimes include one previous year's budget, but not always. So they include the numbers from a previous year so that you have some comparison numbers. They sometimes also include a previous year's actuals, a previous year's actual numbers, so that you have, if it's a June profit and loss statement, you might see the 2016 budget, the 2017 budget, the 2016 actuals and the 2017 actuals, and a percentage comparison. Both a percentage comparison between the 2 years and a percentage number of where you are in that total budget number for this year. Those are the common lines in a profit and loss statement or in a balance sheet of some kind. Now, not all of them have all those things. Some of them will only have this year's data. I don't think those are the best tools for you doing your fiduciary responsibility. But you have to go look at what is available in that profit and loss statement that you have. The most often, though not always, they use the same line item structure that the budget does. And I highly recommend that for simplicity purposes. I have seen cases where that's not true, where the profit and loss statement uses a simplified version, or where it uses a different structure, which I've never quite been able to wrap my own brain around, but I've found it in more congregations than I would have expected. The real purpose of this is for you to be able to make a judgment compared to previous years and compared to your planning, where the congregation is in its fiscal health. And if the profit and loss statement is helping you to do that, then it's serving its purpose. The next slide, if we could. So the whole point of this really is to give you enough information to say, go find your treasurer or your finance committee chair and spend an hour asking them to explain, to walk you through the documents and answer questions. It is, I made it a practice in every ministry that I was in. What is the usual form of accounting accrual? That is a common form of accounting in our congregations. I'm not going to go deep into that at the moment, but it is probably the most common form of accounting. But here's the point: go find your treasurer, go find somebody who knows this, and sit down with them and the documents until you fully understand. Because it's hard for you to live your fiduciary responsibility as a governing board without having this basis. And we're spending a lot of this workshop on this because it is so important.
And I want to point out that what reports you get is often dictated by the software you're using.
Correct. And so and we'll just leave it at that. But whatever software you're using, go find someone who understands it and help you to understand. And I will tell you that finance people love it when people ask and when people show real interest. And if they don't, that's something to talk to your primary contact about. If you have a finance team that doesn't want to help you understand, that's a sign of a deeper problem.